You no longer have to compromise on managing your private wealth. Now you don't have to choose between growing your portfolio or shrinking its carbon footprint. You can do both. You don't have to choose between enriching your own life or ensuring your family's future. You can do both. Or between the trusted service of a local firm and the global access of a multinational. You can have both. Because LGT Crestone gives Australian private wealth investors the best of both worlds. Visit lgtcrestone.com.au.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us here at ausbiz. So let's see how we finished the end of last week. On Friday, European shares closing lower as investors are worried about interest rates remaining elevated. On Wall Street, stocks bounced back from the previous session's heavy sell-off as consumer inflation expectations improved and new orders for manufactured goods rose. Small cap Russell 2000 rebounding after tumbling on Thursday, and for the week, the Dow fell 2.3%, the Nasdaq gained 1.4%, while the S&P 500 was flat. Now, Nvidia led a rally in tech stocks after its blockbuster result earlier in the week when it forecast quarterly revenue above estimates and announced a stock split. Shares in human resources software provider Workday plunged after cutting its annual subscription revenue forecast. Ross Stores rallied after posting first quarter results above estimates and raised its annual profit forecast. And video game retailer and meme stock GameStop surged after fetching $933 million, selling 45 million shares. Now, with earnings season almost at an end, 78% of the 480 companies in the S&P 500 that have reported have topped analysts' expectations, which is just above the average for the past 4 quarters. Well, new orders for US manufactured capital goods rebounded more than expected last month, indicating a moderate improvement in business spending on equipment. Core capital goods jumping 1.2% year on year in April. Meanwhile, the prospect of easing interest rates has been reinforced with a University of Michigan survey showing consumers' inflation expectations have improved, with 12-month expectations falling to 3.3% from 3.5%. And consumer sentiment, however, has fallen to a 5-month low on concerns about borrowing costs remaining high. Well, US Treasury yields, they were mixed on Friday, the 2-year just shy of 4.95% and the 10-year at 4.46%. The US dollar has slipped against most major currencies, with the Aussie trading at 66.2 US cents. So what are the key themes investors should be focused on right now? Well, Elfreda from Alfinity has 5 in mind. She joins us now. Elfreda, good to see you.
Good morning, Andrew.
So one of those, of course, would be AI. Now, you only have to look at the result of Nvidia to realise what's going on in that sector and the enthusiasm that investors have. Before we get to one of those themes, then, talk us through what you saw from Nvidia. Once again, a beat.
Yes, it certainly feels like Nvidia is on a life of its own at the moment. So I think probably by now a lot of people know the name. It's become a bit of a household name and the AI poster child. I think what we've seen, and a few pointers to flag out of that result was really positive for us, that we really focused on, is not just that they beat the revenue for their first quarter of their 2025 financial year, but they also upgraded the next quarter. So that revenue is now sitting at 26 billion. They're guiding it up to 28 for the next quarter. But really, if you look at the mix shift between where Nvidia is really making their money, you can see that data centers is now sort of the majority of the earnings, sitting at sort of 80%. If you take a few years back, it was only at 20%. So you are definitely seeing a huge demand there, and it's ongoing. What we focused on was to say, what's happening down behind the scenes as far as the big hyperscalers? Are they still spending money? And what you've seen over the last, in the quarterly results, is that the big 5, Amazon, Google, Meta, Microsoft, they're spending $200 billion in capital this year alone, and expecting that to increase next year. They're the biggest customers for Nvidia, but I think the positive one was that they said that those hyperscalers only account for about 42% of their sales at the moment, with the rest also seeing an increase across other sectors as well as sovereigns starting to increase a lot in their spend on data centers. So there's a huge demand. So if you look at their innovation and what they expected to happen from here, currently the Hopper 100, H100, H200, those are all seeing massive increase in demand. And then the new one that they're rolling out, the Blackwall, they're saying that the demand for that's already much higher than the supply into 2025. So there's just a few things that gives us a lot of confidence that looking ahead to what can Nvidia earn and how big is that potential market size and their market share, they're sitting at currently at over 80% of the market share. We estimate that they can increase those earnings that's currently sitting at around $25 per share for this year. We estimate that the addressable size, and conservatively say they can only maintain 50% market share, they can easily increase that revenue or the earnings per share to about $50 by 2030. So that's a doubling in the next number of years. So it's a stock that we continue to hold despite the 600% rally over the last 18 months. But it is important to always ensure that you keep the size in check and not overexpose your portfolio just to one stock.
So, I mean, clearly Nvidia are a leader there. What did you, and I mentioned there earlier that we're pretty much at the end of earnings season out of the States now with a beat for most there, but what did you make of those results? I guess particularly with a focus on the Mag 5.
Yes, I think the interesting thing, I mean, there were a few themes that came out of this results season. I think specifically in the world of tech, where most of the Mag 5 sits, you definitely have seen the winners being AI beneficiaries and the losers, as you've mentioned, Workday, Intuit, those sort of companies coming through with weaker results. So you've definitely seen a bit of a bifurcation within tech, and that's pretty much been the same story across a lot of the sectors. So within sectors, you had losers and winners. So it wasn't just a broad-based consumers doing well, so all consumer stocks are doing well. You've seen, for example, in the consumer, something like a Nike doing poorly, but then Hoka's or some of the other products like Adidas doing well. But within the Mag 5, what we have seen is really just, again, very, very strong set of results, particularly for those at the front end of the AI trend, those sort of not just Nvidia that's now reported, but also Microsoft, Amazon, Google, all of those cloud providers, really strong results with the growth rates increasing. So I think it remains about the Mag 5. The key thing for us, though, if you look at the rest of the year ahead, that we expect their contribution to earnings growth in that S&P 500 to reduce. So if you look at the current earnings, yes, it looks like we've beat relative to expectations, as you've mentioned earlier, but it's really on the back of much lowered in expectations into the quarter. If you strip out that top 5 or the Mag 5 now, the rest of the 495 stocks actually saw earnings decline in this quarter. But that is expected, if you look at consensus, to increase to about 17% growth for that 495 into the end of the year. Whereas the Mag 5 saw earnings growth of 60%, that is expected to sort of narrow down to closer to what the overall market is expecting. So yes, they're strong, yes, there's still reason to stay there, but there's also a broadening out, which is fantastic to see.
Well, let's get into those themes that we touched on at the top there. And obviously, you've highlighted what's going on with AI. That is one key theme.
Yes.
But also, in that conversation, you talked about particularly that focus on data centers at the moment.
Yes.
It takes us to that second theme of electrification, the huge demand that's going to be required to feed data centers and the like as we pretty much electrify the planet.
Absolutely. It's definitely a theme that's gaining a huge amount of momentum and airtime. It's around not just GPUs and generative AI and the requirement for, these semiconductors, but also where are you going to store all the data? So suddenly these hyperscaler data centers are just seeing huge increase in demand. So if you think about electrification over the last sort of 5 years, we've seen a huge increase in the electrification of data centers and so forth, but data centers only account for about 2.5% of global electricity supply currently, and that is expected to increase to 7.5% by 2030. So you can see that there's just a large scale of demand currently for electricity, power, but also the networks, the grids, everything that needs to go into powering these data centers to keep up. So there we believe, you need to be invested in this theme. There's going to be a demand for electricity across the board.
So which stock specifically?
Yeah, so we currently own Schneider Electric, for example, really forefront of electrification and data centers being a big part of their business, so they can't keep up with demand. We also own a stock, Quanta, in our Global Sustainable Fund, so they focus more on the grid, and that's where we're seeing a huge increase in demand. They can't keep up with the projects that they have signed up. So it's those sort of products that I think people underestimate what will need to be done in the next number of years, and that's where it's not just going to be natural gas, but also renewables. I think renewables will get a huge sort of boost with the IRA in the US also starting to flow through into the system.
All right. We're a bit short of time, so let's just whip through the remaining three. Now,
Yes.
clearly those weight loss drugs, that has become a theme in itself. Stock specifically, what are you looking for there?
Yeah, so we currently own Novo Nordisk, and we have for a long time. So between Novo and Eli Lilly, they control 80% plus of the market share in those weight loss drugs like GLP-1s. What we have seen in Novo, so just to give it some perspective, we currently have 750 million obese people in the world. That is expected to increase to about 1 billion by 2030. And currently there's around 1 million people on these GLP-1 drugs for weight loss. And that is increasing according to Novo. Every week there's 25,000 people, new people signing up to use GLP-1s. So the bottom line here is that Novo and Lilly are ahead of the curve. Yes, there's new competitors coming in, like him and her announcing a cheaper version, but it's really about expanding the use case, expanding the insurance coverage, and that is where we believe this is a structural long-term trend that you need to be part of.
Elfreda, we've got a minute left, so
Yes.
let's just, the final two there of emerging ones, capital markets, given M&A, perhaps you're seeing that turn up, and also
Yes.
what you're seeing in the US housing market. Stock specifically, how are you playing that?
Yes, so in the capital markets, we're definitely seeing M&A back, financing happening again. So there we have exposure to Bank of America and then private equity player Partners Group. And then in US housing, there's definitely some early indicators starting to roll over. Yes, mortgage rates are still high, but we are playing that through Sherwin-Williams, which is a global paint company, Home Depot, which very geared to the housing sector, and then lastly also Ferguson, which is plumbing. So interesting emerging theme there for us.
Interesting and lots to consider given what
Yes.
you've just spoken of. Elfreda, thanks so much for joining us in our
Thank you.
All right, let's just quickly take a look at where we're likely to get going in just a couple of minutes' time. You can see SPY futures. We're looking for a good rebound today after those heavy losses we saw on Friday. Stay with us. The open is just a couple of minutes away.